Hi, this is Jared Snider. I'm a partner and senior advisor with Exencial Wealth Advisors. We have the privilege of serving a large number of individuals in the energy space, corporate executives, business owners, and professionals. And I just wanted to share a few thoughts with you today in light of everything that's gone on here in the market and in the economy over the last 2 or 3 weeks. Clearly, no secret, it's been a very volatile time. And when things get volatile in the industry, whenever things get volatile in the market, I think it's good to have a framework, just some quick things to be thinking about. Wanted to share some of the actions that we're taking on behalf of our clients to give you some food for thought around how to approach things today. So right out of the gate, I think one of the most important things that we can think about is what we shouldn't do. Sometimes whenever there is chaos in the market or chaos in the economy, we want to be asking, what do I need to do? What needs to happen right now? And sometimes the most important thing is to realize what we should avoid. Number one, avoid making knee-jerk reactions. So as news is coming in, as we're seeing different stories, and a lot of those stories right now, particularly around the virus or around the impacts of that, are very negative. A lot of times it can lead us to want to make a knee-jerk reaction and to go make a decision based on the information that's just come across our desk, just come across our radar. I would just suggest to you that as I've read that book before and seen the results of those types of knee-jerk decisions, usually they're not in your best interests. Usually we're not making decisions that benefit us in the long run when we make a knee-jerk decision based on fear, based on stories around negativity in the marketplace or in the economy. So just kind of set that aside. Give yourself some time to make a decision when it comes to your money. Give yourself a little bit of space to make a decision that's not based on the immediate fear of whatever has just come across your radar. And you'll thank yourself for it down the road. Two is it's important to evaluate your cash reserves, evaluate your cash alternatives right now, particularly for people in the energy industry, whenever there is a lot of unknown around what the trajectory for the industry is going to be in the near to medium term. Just know what your cash position looks like. Hopefully we've done some work over the last few months or years in having some reserve cash. I always recommend to my clients to keep 3 to 6 months of your expenses set aside in cash, but go evaluate that for yourself. What are our alternatives for cash? There's cash in the bank. There's cash available through after-tax investment accounts if it's not deployed in the market, if it's just sitting there in cash. We've got other sources of cash would be things like asset-based loans, whether those are loans against investment accounts as a bridge sort of loan. Certainly real estate loans, got to be really, really careful when we're doing that type of access to liquidity and using loans. But just know what that looks like and be aware of what that position is and just be prepared to weather some uncertainty on the cash front and to cover those expenses that we know will come up. A question I'm getting from a lot of clients right now is this a good time to invest? If we're thinking about taking cash that's not those 3 to 6 months of reserve funds, but taking really excess cash and deploying it into the market. Is this a good time to do that, and how should we be thinking about it? We think that yes, this probably is a good time to be putting cash to work. Whenever we get past this immediate crisis, whenever the medical side of this crisis looks like we've kind of peaked in terms of the number of cases, whenever we're seeing treatments for the coronavirus and COVID-19 come out, when we get a year plus down the road, we're likely going to look back and say, hey, these are good prices to be buying quality companies. So just some food for thought for you in doing that. Again, don't make a knee-jerk decision when you're investing. It's okay to put money to work gradually. It's okay to do what's called dollar cost averaging. That's what we've been doing on behalf of our clients who have cash to put to work. So perhaps that looks like making some initial purchases now, perhaps doing that on a day when the market is down, and then having a plan in place to gradually make some additional buys on a go-forward basis. One thing that I know is really common to do is to invest in what we know. What do we know about? Well, when we work in energy, we know energy stocks, right? And so energy stocks have certainly been impacted even more so than the rest of the market over the last few weeks. So I think there's a tendency and a temptation to want to go and kind of load up on those energy stocks. Just as a rule of thumb, I recommend never having more than 20% of your liquid assets in one single position. And if you find yourself where you are already there, you already have that position, maybe it's good to think about a plan, probably not right now, but in the future, over time, to be making some transitions. But if we're deploying cash right now, don't deploy your cash in such a way that you're really over your skis and really, really overweighted in any one name, whether that's an energy name or any other name. But particularly whenever we know some of the challenges that the energy markets are facing right now, I would really caution against going and just loading up on energy stocks. There's lots of opportunity right now in the marketplace, and it doesn't really necessitate going and loading up on one particular name. Anytime we're investing, we should be doing that in light of what our big picture goals are. What are our big picture goals? How is money fueling our future success? How is our investing really lining up with our goals and the things that are important to us? That's really what we should be thinking about, what you should be thinking about whenever you're putting money to work in this market right now. So be cautious, be measured. It's okay to dollar cost average. It's okay to take your time whenever you're putting cash to work. A couple of other things to think about in terms of the positions you already own. I've had a number of clients ask, hey, should we be moving out of any part of the market right now? One of the things that we always think about is, what's the price for a stock? What is that based on? It's based on current and future earnings. Certainly, current earnings are being impacted, pretty meaningfully by the economy slowing down as a result of the coronavirus. But our future year's earnings are likely still going to be there. And our stock prices that we've seen over the last 2 to 3 weeks have been discounted not just for this year's earnings, but also for those future year's earnings. So if we sell stocks today, we're really saying, hey, we're selling because we don't think we're going to have any future earnings either. And we just don't think that's very likely. We think future earnings are going to come back. This is not the end of the world. It's certainly troubling. It's not a fun time to be in the market. It's not a fun time for what's going on in the country right now. But we don't feel that it's necessary for anybody to really think about going and liquidating all of their stocks. It's probably not in your best interest to do that because those future earnings are going to come back. So for the positions that you own in the market right now, if you need a second set of eyes or some evaluation on that, that's okay. But just as a general rule, I say, hey, don't hit the sell button now because if you do that, you're giving someone else a deal on the stocks that you own. For every transaction where there's been a sell over the last 2 or 3 weeks, there's a lot of conversation around, well, the market is in a sell-off. For every transaction where there's a seller, guess what there also is? There's also a buyer. There's a buyer and a seller on each side of a transaction. So just ask yourself, am I on the right side of this trade if I'm making a trade today? A couple of other quick points around tax planning. If you're in a position to where you can accelerate your 401k contribution, I would suggest doing that and try to get those 401k contributions in now. Certainly if we're doing that on a tax-deferred basis, if you're in a high tax bracket, it makes sense to be maxing out your 401k deferral. Try to get those deferrals in while the market is down. We don't know how long the market will stay at these prices, but whenever we see things at a discount, whenever you're saving into a retirement plan, you're dollar cost averaging into markets. So think about raising your 401k contribution. Along those same notes, if you're going to be saving into a 401k, it's a great time to think about using the Roth feature of your 401k. So within a retirement plan, we usually can be saving on a pre-tax basis, or we can be saving on an after-tax basis in a Roth. Whenever you save on an after-tax basis through a Roth contribution, those dollars go in, we pay taxes on them for that particular tax year. All of the investment growth going forward is tax-free whenever we're using those dollars in future years as liquidity in retirement. So if we can get the market bounce back, that will eventually happen after this pullback. If we can have that happen inside Roth dollars and have that stock price recovery happen inside a Roth account, that's really attractive from a planning standpoint. A couple other things just to think about. If you find yourself in a lower tax bracket this year, it may be worth considering doing some Roth conversions. A Roth conversion just means taking dollars from a pre-tax type account like a 401k or an IRA, converting those dollars into a Roth account. So think about that, whether that would make sense for you, because all of the investment rebound that would happen inside the Roth account, that would be tax-free. The cost of that is paying taxes on however much you convert in this tax year. So just a few quick notes for you there. But the last thing I would just leave you with is just take comfort in the fact that this is not going to last forever. This market pullback will end. All of the chaos surrounding the coronavirus situation and the economic pullback and the impact on energy companies and energy markets, it's not going to stay this way forever. We've been through difficult times as a country before, and we're going to make it through this. If you need any assistance at any point, thinking through any things we've talked about here today, we're always happy to be a sounding board. We're available for you anytime, just to be a kind of another set of ears and eyes on your overall financial picture to give you some perspective. There's absolutely no obligation for you to become a client of ours in doing that kind of conversation. So anyway, I hope you have a wonderful day. If there's anything we can be doing for you, please reach out and let us know. Thanks so much.